The stock market has officially paused for the weekend, which gives us the perfect opportunity to dissect what just happened. DATAVAULT AI Inc., trading under the ticker symbol DVLT on the Nasdaq exchange, officially wrapped up its regular trading session on Friday, May 29, 2026 at 4 p.m. Eastern Time at a price of exactly 50 cents per share. This closing figure represents a subtle but highly calculated intraday move upward of 0.58% from its opening levels, with the stock oscillating throughout the session between a low of 48 cents and a high of 54 cents 7. When you factor in the immediate after-hours activity, the equity pushed slightly further to rest at around 50 cents 44 by the time the tape completely stopped at 8 p.m. What the broad market completely missed during this Friday session, however, was the structural accumulation pattern hidden beneath the massive trading volume of over 45 million shares. While day traders were simply watching a 50-cent microcap stock hover in a tight range, institutional block orders were quietly shifting positions following a major operational announcement regarding real-world asset token listings. The market treats this as just another speculative small-cap asset, but the underlying tape tells us that a massive expectation gap is forming between retail sentiment and actual institutional positioning. The common narrative surrounding DATAVAULT AI Inc. is highly predictable. If you scroll through typical online investing forums or scan the sentiment on popular investing sites, most people see a beaten-down tech stock that has cratered from its 52-week high of $4.10 all the way down to the pennies. The casual observer thinks this is a highly distressed business running on fumes, especially when looking at the historical volatility that pushed the stock down to its 52-week low of 25 cents. But looking at the reality beneath that surface-level assumption reveals a completely different fundamental landscape. The company just executed a binding services agreement with Perpetuals.com to integrate its asset tokenization programs directly onto an exchange infrastructure that connects straight into a regulated European Union multilateral trading facility. This means that instead of just talking about the concept of digital securities, they are establishing an active, compliant, daily trading pathway for tangible commodity assets, starting directly with their copper initiatives. When individual brokerage clients look at a stock at this price point on their Interactive Brokers platform or check their balances on the Robinhood app, they usually assume the underlying entity lacks liquidity. The broader expectation is that microcaps are trapped in a cycle of dilution without commercial viability. Yet the reality of the balance sheet defies this assumption. DATAVAULT AI entered this period maintaining roughly $250 million in liquidity, supported by a working capital cushion of $140 million that was secured through structured private placements. This level of capital preservation is incredibly rare for a company sitting with a total market capitalization of approximately $425 million. It shows that management has purposely insulated the business from the immediate credit freezes that usually destroy companies trying to build out physical data infrastructure. Let us break down the immediate price action and trading mechanics, because the daily swings tell a fascinating story of algorithmic accumulation. When trading opened on Friday morning, the stock experienced an immediate pop to 53 cents, representing an initial surge of over 7% as the news of the commodity tokenization deal hit the wires. For the first 2 hours of the session, the buying momentum remained incredibly sticky, holding the line above 52 cents. This is precisely where individual brokerage accounts utilizing tools like SoFi Active Investing or self-investing platforms started chasing the momentum. But right around midday, institutional sell algorithms cap-managed the rally, grinding the price back down toward the 50-cent psychological support level. This standard capital market maneuver flushes weak hands and short-term options traders, allowing patient accumulators to absorb blocks of shares without spiking the national best bid and offer. If you look at the macro environment, the trading ecosystem has fundamentally changed for these types of hypergrowth tech plays. Long gone are the days when retail traders could blindly throw capital into any digital asset platform and expect overnight riches. Today, whether you are using traditional platforms like Fidelity Investments or newer interfaces like the Robinhood mobile app, success requires looking at hard execution metrics. For DATAVAULT AI, the execution is tied directly to their tokenization pipeline, which currently boasts 3 validated initiatives representing a combined token issuance target exceeding $328 million. These are not vague ideas. They are structured, asset-backed programs covering copper, gold, geothermal energy, and strategic minerals. Take a moment right now and let me know your thoughts on this operational strategy. Comment below how many shares of DATAVAULT AI you currently hold, or if you are choosing to sit on the sidelines until the regulatory landscape becomes clearer. Driving clarity in the comment section helps everyone see how retail sentiment aligns with institutional volume. To truly understand why the stock is behaving this way, we have to look closely at the massive contrast in their financial reports. In their first quarter earnings release for this year, the company posted a massive 443% jump in revenue compared to the prior year, bringing in $3.42 million.
On paper, that top-line growth looks fantastic, and it's exactly why some aggressive analysts maintain a highly bullish outlook with price targets pointing toward $3. However, the expectation of immediate profitability hit a wall of cold reality when looking at the net income line. The company reported a deeply negative net margin, losing $53 million for the quarter due to massive upfront capital expenditures required to establish their quantum-ready edge network. When self-investing individuals see a quarterly loss that exceeds the annual revenue, panic sets in, which explains why the stock has faced intense selling pressure over the last few months. This brings us to the core business model of DATAVAULT AI Inc. Founded under a clear thesis of data monetization, the company focuses on cloud-based asset valuation, security, and digital replication. Under the leadership of Chief Executive Officer Nathaniel T. Bradley, the firm has systematically acquired complementary technologies, including the integration of businesses like Nayax and Cybercatch, to build an ecosystem where physical assets can be converted into compliant digital securities. Their flagship programs like Gold Vault are designed to link digital tokens directly to physical assets originating from mining operations in the United States, giving buyers fractional exposure to raw materials using traditional COMEX benchmarks. Each tokenized program is built on proprietary, patent-protected structures designed to provide liquidity to asset classes that were historically locked behind institutional walls. The broader market narrative often groups this company with standard software-as-a-service providers, but their capital expenditure tells us they are actually building a heavy infrastructure business. They are actively rolling out their proprietary edge network across a target of 100 cities. This requires a massive amount of upfront capital, which explains the recent $60 million registered direct offering of common shares. This capital raise is a classic example of the expectation versus reality friction. The expectation among short-term traders was that the company could scale without further dilution, so the announcement of the share offering caused an immediate drop in the stock price earlier in the month. The reality, however, is that without this funding, the rollout of their edge nodes would stall out completely, destroying the long-term value of the network. When evaluating an investment of this nature, sophisticated market participants look at how the asset fits into a broader portfolio structure. For instance, individuals managing wealth through automated platforms like Schwab Intelligent Portfolios or managing individual brokerage accounts via Fidelity Brokerage look for specific risk-reward profiles. DATAVAULT AI sits at the absolute extreme end of the risk spectrum. It's an asset that demands a deep understanding of market mechanics, regulatory shifts, and corporate liquidity. If you are analyzing this asset alongside core assets like Apple stock, Tesla stock, or Nvidia stock, you are looking at completely different universes of capital allocation. While those megacaps offer stable institutional liquidity and predictable free cash flow, a microcap like this is purely a bet on operational scaling and regulatory alignment. Looking ahead, the future outlook for DATAVAULT AI is completely dependent on two distinct catalysts that will determine whether reality can finally overtake the market's negative expectations. The first major catalyst is the execution of their second-half revenue targets. Management has repeatedly reiterated an ambitious full-year revenue guidance of $200 million, explicitly stating that the financial performance is heavily weighted toward the final 2 quarters of the year. If the company successfully converts its $800 million in first-quarter contracts into recognized top-line revenue by the end of the year, the current valuation will look completely disconnected from reality, forcing a massive short-cover rally. If they miss this target even slightly, the market will likely penalize the stock heavily, assuming the business model can't scale. The second, and perhaps most critical, is the legislative environment in the United States. The company's entire tokenization framework relies heavily on the pending passage of clear digital asset legislation, specifically frameworks like the Clarity Act. Right now, major institutions are hesitant to deploy massive capital into tokenized physical commodities because the domestic regulatory landscape remains incredibly murky. If Washington passes definitive guidelines that favor the integration of digital securities with traditional asset classes, it will immediately validate DATAVAULT's patent portfolio. Conversely, prolonged political gridlock or restrictive regulatory enforcement will keep these tokenized programs localized to their European trading venues, limiting the overall addressable market size. To map out the potential scenarios for the coming months, investors must track the volume levels around the 50-cent support zone. If institutional accumulation continues to hold this floor, it indicates that the smart money is comfortable absorbing the dilution from the recent capital raises. For anyone utilizing online investing platforms, whether it's browsing through Fidelity IRAs, checking updates via SoFi Invest, or executing active trades on interactive brokers, the key is to separate the emotional price action from the operational reality. The central conflict for DATAVAULT AI Inc. remains unchanged. The market expects a cash-burning microcap to struggle under the weight of its infrastructure costs, while the corporate reality shows a heavily capitalized, patent-protected platform quietly building out a global asset tokenization network. Ultimately, the stock will find its true valuation at the intersection of these two competing forces. Disclaimer: this video is for educational purposes only, not financial advice. Please do your own research before investing. Market involves risk. Like this video, comment your thoughts, share with your friends, subscribe for more updates.